ready to pick it up can speak to us about the accounting equation, things that you discussed under the accounting equation. Okay, if not, let me do it this way. Now, the accounting equation, or somebody is ready to do that for me?
Yes, please.
Okay, so Bishops, go ahead.
Sir, please. Okay. The total is about the formulas you use to find
I think so,
some of the
Bishops.
items in accounting, such as the assets, capital, and the liability. And the
Okay.
assets, they told us that before you find the capital, liability, and before you find the capital, you must subtract the liability from the assets.
Okay. Okay, thank you very much, Sir Bishop, or Prof. Bishop, sorry.
Yes.
Okay, can I hear from Prof. Alexia?
Yes, please. So we also talked about like the definitions of the various terms, the assets, liabilities, and the capital.
Okay.
And we learned that the capital is the resources. They're the resources that are supplied into the business by the owner themselves. They're from the owner. The liabilities are the things that the business owes. Like when the business owes another organization, something like that.
Okay.
And the assets are the properties that are owned by the business. The ones that the business themselves own. Yeah.
Okay. Okay, that's awesome. I'm happy when my students say or give us the core point exact. Okay, so Bishop, you want to add on? Go ahead. Go ahead.
Please, and the total is about the fixed assets.
Okay.
Fixed assets, yeah, and current.
Okay, the current assets. Okay.
And they told us that items, the fixed assets are the items bought for the running of the business, not for resale.
Okay.
The current assets are bought for the running of the business.
Okay. That's awesome.
And be sold.
Okay. That is.
They taught us about the long-term liabilities and the liabilities.
Okay. Wow. I'm impressed, and keep it up, okay, with how you are able to keep core points in your beautiful brains. Okay, so I'll just say something small about it. So basically, in accounting, we establish a mathematical equation to ensure that the properties owned by a business is always equal to the sources that were used to fund those properties, right? So the key reason why we are establishing this equation is to back the fact that every business, okay, let's go back into our communities and take a grocery shop, for instance, as a business. So let's say Antaraba Enterprise, and they sell groceries like Milo, chewing gum, toffees, etc., biscuits, etc. Now, if we take that Antaraba business, we are saying that all the properties of Antaraba business, okay, and so if you picture a grocery shop, the properties of a grocery shop would be one, the building in which the shop is. If it's a container or any other thing, that's we could call it a container or a kiosk or a building, right? It's one of the properties. There are some of these grocery shops that have vehicles. Okay, so the vehicles are also the properties of the shop or the business. When you enter the shop, sometimes you see some fridge, you see some computer, you see some other equipment. So we put all those things together into equipment and fixtures and fittings. Sometimes you also go there, you see some fittings and furniture. Okay. So these are properties of the asset. Aside what I've said, also the groceries that you see there, the stock of the sugar, Milo, toffees, they are also properties, right? Because owned by the enterprise, Antaraba Enterprise. Now the question is, how did Antaraba Enterprise get all these things, these resources that we are speaking about? How did they get a building? How did they get the vehicles? How did they get the items in the shop? So if you do the analysis, then you see that, oh, okay, maybe the building, the vehicles, etc., were given by the owner of Antaraba Enterprise. You'd also realize that, oh, okay, so maybe the goods there, the goods in the shop were supplied by somebody else. So the essence I'm trying to make is that the accounting equation is used to establish that the resources of a business should be equal to the sources of funds used to secure the resources. Now, let me take you as a business, just an assumption. So if, for instance, Alexia Enterprise or Bishop Enterprise, if you are a business, even though you are not a business, you are a natural human being, right? But I'm just, for the purposes of our discussion, let me use you as a business. If you are a business, then the question is, you have some properties. Alexia has a school bag, has a chop box, has a trunk. What else do you have, Alexia, that I've not mentioned? You have a phone. Can you add on?
I have books.
Okay. Do you have a vehicle?
No, please.
Okay. So if we look at the things that we've just mentioned, trunk, chop box, books, you have clothes, you have shoes, you have phone. So these are things that belong to you. They are resources that you have. The question is, how did you get them? Okay, how did you get those shoes, clothing, trunk, chop box? And you realize that some of these things were given to you by your parents. And again, I'm assuming that your parent, or it is a reality or a fact, even though we don't really speak about it much, your parent own you, right? They own you because they gave birth to you. So some of the things that you have came from your parents who are the owners of you, Alexia, as a business, right? And sometimes it's also possible that some of the things you have did not come from your parent, but came from people who are not your parent or who are not your owners. Do you have anything like that? Anything from somebody who is not your parent or something?
Yes, please.
Okay, what is that? Is it a book from a friend?
Yeah, yes, please.
Okay, thank you. So the point I'm trying to make is that if you take the resources of a business, right, it should be equal to how those resources were secured. Okay, so in this case, the troubles, trunk, phones, shoes, etc., and the books, in the case of Alexia, came from the parents who are the owners, and then some from friends who are third parties or who are not owners of Alexia business. I don't know if that makes sense. So the resources are what we term as the assets, right? So the resources are what we technically term as the assets. So the first thing in the equation is that assets, which are the resources, should always be equal to the sources of funds. So we just realized that some of the funds may be coming from the owner, and anything coming from the owner, we term it as capital, right? And we just realized that some of the resources may be coming from people who are not owners, or they are third parties, and those we call the liabilities. Okay, so the basic accounting equation is that asset is equal to capital plus liabilities. However, there are instances where we could have assets equaling only capital. So if you see such an equation, what it means is that the resources of the business were only funded by the owners. None of the resources came from third parties, right? So the assets are equal to the capital, where the owners are the people who funded every property that the business has. There could also be scenarios where you have assets equaling liabilities, meaning that, no, I think you should tell me this one. When assets are equal to liabilities, what is the essence of that? Let me pick on, say, Bishop.
This when the assets are equal to the liabilities, it means that equipment owned by the company were bought from loans and from loans.
Okay, so they were gotten from third parties, people who are not owners of the business, right? Exactly.
Yes.
Thank you very much. So the equation asset equals liabilities means that the resources of the business, right, which are the asset, the resources of the business were funded by only third parties. The owner did not provide any funding in that regard. Okay. So these are the possible equations you could have. But in reality, most businesses have this as a accounting equation. Okay, so I just wanted to establish that for all of us. And then I think you have given me much information about what assets are, what capital is, and what liabilities are. And I think you also added the types of assets, which are the fixed and current. When you pick the fixed asset, you have the tangibles and intangibles. And when you pick liabilities, we have the long-term liabilities and then the current or short-term liabilities. Capital is capital. It has no forms, especially for certain types of businesses. Okay, so I think this is where you also looked at doing some mathematics when you'll be given some assets and liabilities and you'll be asked to find the capital or whatsoever. So this equation can be manipulated when we apply the concept of change of subject. So if the fundamental equation is asset equals capital plus liability, then we can say that capital is equal to, yes, who is going to assist me? Capital is equal to?
Capital is equal to assets minus.
Okay, assets minus liabilities. That is excellent. Likewise, we would have liabilities equal to assets minus capital. So I'm sure your teacher, gave you a lot of exercises or assignment where you have to calculate the capital when you are given the assets and liabilities, or vice versa, right? Anything before I move on? Are we good?
Yes, please.
Okay.
Yes,
I hope I'm not shouting. Am I shouting too much?
no, please.
No, please.
Unfortunately, I've not even eaten.
Yeah,
I
please.
don't know why. Yeah, Bishop, what were you saying?
Yeah, please. I am moving on to the balance sheet.
Oh, yeah, sure. So I'm just getting all of us to the same level, and then we can pick on new concepts. Exactly. But St. Augustine's, I'm sure you did the balance sheet, you did a bit about it, or you had some confusion there.
So please, no, we did everything there.
Okay, good. So since we are now zooming, so it was in the accounting equation that the balance sheet was introduced. Now the balance sheet is nothing. It's just a statement that is going to show these equations, right? So what I would want you to do is getting familiar with assets, liabilities. As for capital, we know it's capital, but we should be familiar with assets, capital, and liabilities. And now that we're speaking about it, let me also add this to it. There are some hidden elements in the accounting equation that I need to speak to you about. I don't know if your teacher did it, but let me do it. Now, I'm picking on it from the fact that in accounting, in financial accounting, let me be specific. In financial accounting, we have 5 elements of financial accounting, and they are as follows: assets, capital, liability, expenses, income, or revenue. Okay, so these are the 5 elements of financial accounting. Please note it very well. These are the 5 elements of accounting. When I say element of accounting, what does it mean? It means that anything that you do in financial accounting would either be an asset, capital, liability, expense, income, or revenue. Now, if you have observed, the first 3 elements are what is shown in the basic accounting equation. The expenses and income are hidden. They are part of the equation, but they are hidden. So I need to show you the expanded version of the accounting equation. But before I do that, let me tease your appetites more. Now, let me ask you, have you ever heard stories of, or started business, but ni sikani in ashe? Have you heard anything like that? Or this guy a business, but skanashi?
Yes, please.
So the question is, what will make, at the end of the what will make the money burn? Excuse my language, I'm just being. What will make the money burn? The end of the skanashi.
The entrepreneur is not able to manage the money.
Okay. He's not able to. Okay, he's not able to manage the money. Alexia, what's on your mind regarding this?
Please, I also think that bad pricing of items can also be a cause of that.
Okay, that is true. So all that you have said would lead to a final destination, that is losses. So if the business is not managed well, if he's not pricing the goods well or the products well or service well, it means that he will make a loss of a boka, and that loss will render the capital he has invested to, to burn, if I'm using sikanashi in quote, right? So it means that if you are doing a business, there's the probability that your capital would burn or sikanabashi because of losses. You are making a lot of losses. And the reasons why you are making losses may be many. You mentioned some of them: improper pricing, bad management, etc. Right? So it also means that if there is a case where somebody is doing business and the business is flourishing, okay, then it means the person is getting more profit. The person is making profit and not losses. So the point I'm trying to make is that the capital of a business may be decreased by losses or may be increased by profits. So if we fix that in the equation, it means that the assets equaling capital, which is affected by profits. So profit will add it. So profit will add some to increase it, which will be affected by plus profit and will be reduced or minus losses. Then plus our liability. So I want you to get the fact that when you make profit, it's going to affect your capital. If you make losses, it's going to affect your capital. Losses will affect it negatively. Profit will affect it positively. Now, let's come to the profit or loss. What are the elements that would help a business know whether it is making profits or losses? The elements that will make a business know whether it is making profit or losses are the income and expenses. So the income is what are you getting from the business? If it is goods that you are selling, what are you getting from selling the goods? So that is the income or revenue, the sales revenue. And even taking us back to GHS, you remember we're able to find profit as your selling price minus your cost price. So how much did you sell? What is the revenue? And then the expenses will be the cost you incurred for selling. So you offset the two and see whether you have a profit or a loss, right? So it means that if you want to know your profit or loss, you have to compare your income to your expenses. Am I confusing you or we are okay?
Yes, we are okay.
Good. So now let's look at something here. I'm building on the equation so that we have the extended version of the equation. So profit or loss is equal to the income minus the income or revenue minus expenses. Because yes, if you want to get your profit or loss, you compare the income you are getting from the expenses that you have incurred. So if you look at this equation, it means that income is also positive and expense is negative. In that, income would give you profit, a positive thing, and expenses would give you losses because expenses means if you are paying expenses, it means you are running at losses, right? Good. So now if you want to fix these two elements back into the equation, then my dear lady and gentleman, we can say that the extended version of the accounting equation is given as follows. Assets are equal to capital, which is affected positively by income, minus expenses plus liabilities. So take it from me today if you didn't discuss that in class, but this is an extended version of the accounting equation. You have to know, because when we begin the double entry principle, you would need knowledge about the income and expense and how it affects the accounting equation. Okay, so as you see here, the income would positively affect the capital. Okay, so what is the start here, Juma? Income. When you are getting income and revenue, it's going to increase your capital. when you begin to pay for expenses, you know, expenses will take something out of the business, so it will reduce your capital. Okay, so this is the extended version of the accounting equation. Any question from my beautiful lady Alexia and handsome gentleman Bishops? Any question from you?
No.
Okay. So now what we have to do, before we can zoom into our new topic, I'll speak about the balance sheet probably later. But what we have to do is to know what are assets examples, what are liabilities examples, which I believe you have done that. But key, we also need the expenses and the income. So let me ask, did you hear anything about expenses and examples of expenses, as well as income and examples of income?
Please, in school, we didn't do that.
Okay. Sir Bishop, what about you?
So please, come to the income. About it.
Okay.
The income when our debtors, when we gain money from our debtors.
Okay.
Yes.
And what of the expenses?
Expenses. When we use the cash, assets, cash to pay some of our liabilities.
Okay, so I think I'll give you the benefit of doubt, and then I'll take on the baton or the baton, yes, and continue the race from here. But today being our first class, I would want to, I don't want to drag the whole class. Today is our first class. Ordinarily, if I meet you for the first time, I just get to know you, we establish the rules, and that is it. But today, I think you people have forced me to teach something small, right? A quick revision. So I think I'll end here for today's session, and then we'll continue hopefully on our next meeting, which will be next week, right? So any question, anything for me before I wrap up and close the class?
So should we go and do some researches about the topic? Hello. So should we do some research about the topic?
Yeah, Bishops, hello, can you hear me?
Yes, please.
Okay, I didn't hear what you said earlier, so come again.
So please, I wanted to know and do some research about the topic.
Oh yes, I would share the topics with you. The topics that we are going to treat. I would share them with you so that some of you can, go ahead and read further on it before we even discuss it, right? Good. Madam Alexia, anything from you?
No, please.
Okay, so let me thank you for making it up for today's class. It is my wish and prayer that always you'll be in class. Okay, and I think I'll get. I think 2 people were to join us, but they couldn't. And I think we are still getting people to register, so maybe we'll have a lot of students later on. But for now, I think we are 4. Okay. So let me say bye-bye to you for now. It's a wrap from Mr. Amwa in financial accounting class. I'll see you, God willing, next week. But I'll discuss certain things on the page and even give you an assignment or a test. Okay.
Yes.
So bye-bye.
Bye.